I want to ask a question about the safes for a second. James, does New Fund not do safes?
I think generally speaking, there's an aversion in angel groups to safes. Call it an allergy. I think it's a bit of a funny one, to be completely honest. I don't know very many people who've been burned by safes. I think people don't like the instrument, but they couldn't tell you why they don't like the instrument.
So here's an interesting. So as you said, I pulled up some Carta data. So for Austin, this is from January 2023 to May of 2024. According to Carta, 72% of pre-priced rounds were on safes. So that means that you're seeing almost none of the deals if the angel groups are saying we don't do safes.
What round was that at, though? Sorry if I missed that.
This is pre-priced. So this is basically it's
Pre-priced,
pre-priced.
okay.
So and then it breaks it into safes and convertibles. So 72% was on safes, 28% was convertibles, and this is Austin specific. So that's an interesting. If the angel groups don't do safes, they're missing a huge majority of the deals.
Well, there's two kinds of safes out there. There's the pre-money safe and the post-money safe.
Yeah,
I find most investors are very much up on the post-money safe because they invested in a pre-money safe. The entrepreneur raised more than they said they were going to, and the investor got diluted, and they didn't get the conversion they thought they were going to get. So the first question I hear from most people is that a post-money safe? And while there's other issues with safe, it's really technically an equity instrument. You should be registering it and so forth. That's the main issue I find is the conversion is just not happening the way they thought it would. But you're right, safes are everywhere, and you really have to kind of play with it. And I'm just coaching everybody, get to a post-money safe, and you'll have less problems all around.
Yeah, it's kind of back to our question on selection bias is if the angel groups are just turning them if kind of as a whole saying we don't do this, then it's an interesting case of the kind of back to the question of are there two different ecosystems kind of running around?
Yeah, and potentially. So go ahead.
But I was going to say, I think it's a bit of the stage that's the best fit for the venture group as well. I think that gun to my head, I wouldn't say that angel groups excel in pre-seed deals. I would say seed and Series A are really where they seem to do better. And so I don't think it's the end of the world avoiding safes for that. If you're looking at only pre-seed and you want to be the first capital, then yeah, maybe you're gonna have to do a few more safes. But what Katie said, if they're writing $600,000 checks, I mean, you can throw your weight around if that's your average check size. If you're in the $500,000, you're probably on the smaller side of Series A. But if you can get well over that $1 million range, you can compete with the Series A funds, and that's really where I think there's a gap in the current market. And so everyone has their criteria. I don't think that saying we're not going to do safes puts you out of the market in any way, shape, or form. But yeah, if you're at the earliest stages, I think you're probably at a disadvantage. But I don't think look, New Fund is not always the first capital in, and so them saying, hey, we're not going to do a safe, but we'll lead around and we'll give you $500,000. I think that's a bit of a different calculus.
Yep, and I would echo that, James. So, yep, most of the time we're leading rounds these days, which has been great because we've had more members, we've been able to write larger checks. So if a founder does come to us and they're raising on a safe, then as long as they're okay, if they make it through our entire process, converting it to a convertible note or equity with that round size, then we'll give them a fair squeeze. So it's not writing them off, it's just educating them that, and there's so many forms of safes, like Hal said, so many different things that you could put into the safe to provide more protections or interest rates or maturity dates and all those. But it's just as a blanket, if you come to us with the YC safe, we're probably going to ask you to add some stuff in and adjust it.